Okay, now for the previous sessions we've been looking at this. Okay, um, if you don't have any knowledge to choose a coin to trade by analysis, please come in the group and ask for the signals. They'll provide signals. But before we proceed, most of us are floating. But how are you floating? For me, I love floating loss because if there's no floating loss, I'll not make money. Okay. My coins have never gone to green, but I still make money. My coins have never gone to green, not even a single day. I've been with coins for 8 months. I trade them on cycle and I leave them. I set many margin calls. I keep earning from from the what from the margin calls. I want to first show you this. You come on circle and you see this. You see creating these circles. Someone was asking me, how can I come up with a circle? Okay. It is very easy to create a circle, but you have to be a real robotic trader. With your one shots, you are not going to create a circle. These people who create circles are using what we call margin calls. Without margin calls, you cannot. Because one of the conditions to create these circles, you have to be with your, at least you will have made $1,000 as profits on your revenue details. Then you have to achieve 100 trades, like the 100 executions, buys and sells in the last 7 days. You cannot do that by one shot. You can do that by margin calls. Okay, this is when you can come up. So whoever you're seeing here is a copy trader. These are copy traders. They have mastered how to use the bot. They use margin calls, good capital management, and all you have to do is synchronize their strategy. Just copy their strategy. But the disadvantage I saw here is that you have to guide this person how whoever has synchronized the strategy, because you may find this person or this one trading with $5,000, then you come with your 500. Of course, the settings are not going to do what they're going to work. They're not going to work out. Okay. Now, when you try to look at these people, these people trading, okay, try to look here. You see this percentage. Someone has made 1,894%. This percent is not of, this is trading bonk. It is not of your one shots. These are sub positions, margin calls. Whenever you look at this percentage, you can trade and achieve this percentage while trading this coin even for a full year. You just have to keep there enjoying buys and sells. You're compounding, you're topping up, you're adjusting the settings. You see 1,000 sats, 1,600%. Have you made that? No, because you don't respect the robotic settings. Aqua 1,500%. This is in the sub positions. I want to show you how important margin calls are. You people despise margin calls, but if you learn how to use margin calls the proper way, you'll never take any day without making money, let me tell you. You see, all these coins is trading them with margin calls. Margin calls, these percentages. It doesn't mean that it has to wait for the coin to be in green. No, in sub positions like the way I've been showing you, you can earn from the deeper market, even though you're floating negative 40, negative 30, negative 20, you can still keep earning in the margin call as long as you've done what we call good capital management, risk management, proper setup, then you leave the robot to do its work. Okay. Okay, so let's go to the settings. I want us to talk about the so one of the coins good to trade now, according to my analysis, Celo is good coin to trade now. It is a very good coin to trade. It is in top 200, a very good coin to trade. I think I'll have to skip here. So this is the chart you're given. So you'll have to first look at the 4-hour time frame. You look at its trend. At least you cannot fail to make this analysis. from an upward trend to a downward trend. That means this coin is in oversold. It is very good to trade. So when you look at the, let's go to 4-hour time frame on technical indicators. Of course, you're given strong sale. Whenever you see strong sale, this coin is very good to buy and set margin calls. Very good to buy and set margin calls. You see, it's pointing on strong sale, and you can see most of the indicators. If you look at the moving average, the market, they're all on sale. That means it is a very good coin to buy. It is in an oversold area. When we look at the technical indicators, buy, sell, you can see the pivots. These are not so important. Okay, so you're good to go with this coin. You click here, Martingale strategy board. You proceed to trade settings. We have the smart create. For the novice, we have the manually create, where we put our own strategy. Choose manually create. Okay. I don't know which capital I can use, because if I keep using $50, $100, I'm going to make you lazy so that you don't look for your capital. This time I'm going to use $1,000. If you're trading and you blow $1,000 with royalty, try so much hard if you want to enjoy margin calls. Try as much as possible to raise your capital at least to $1,000. With $1,000, it is very easy for you to compound. What is compounding? Compounding is simply adjusting your settings in a way that the profits you've made, you put them back in the market, increase your profits and your trading volume. We call it compounding. And you can compound with royalty within margin calls, within multiple buying ratio, within this, we shall look at that. So we are going to use $1,000 as our example. Guys, are we following? Are we following? I may be talking here, but we are not following up. Guys, are we following? Are we following? Are we following? Are we following? Okay. Now let's proceed. I'm using 1,000. Whenever you're trading, one of the principles of trading is not to look at what you've earned, the profits, is to look at what you've won. Have you won that day? If we come in our royal queue, the way of winning, according to the trading, the proper trading, is not the profits you've made, but the sales that have been made. Like, are there sales and buys? If my robot is buying, is it selling? How many margin calls has it sold today? That means you've won. Okay, you've won on the market. Like, you have direction. You're trading with direction. Okay, you have $1,000. Okay, now for me, whenever I'm setting up, I use 10. I'm going to put each and every setting, and I'm going to explain why. I use 10 as my first buying amount. Why do I use 10 as my first buying amount? I'm not meaning that if you use like you have to use, it is a must, you have to use 10. No, this is for me, because I told you with this robot, you have to just understand the settings. Don't cram. Understand the settings. Whatever you put here, you should know that why is it there. I use 10 as my first buying amount because it is very easy to calculate. It is very easy to calculate. Any number that ends with a 0, it is very easy to calculate. 10 times 2, 20. 10 times 4, 40. 10 times 15, 150. Okay? It is very easy to calculate. So if you want, you can also put any first buying amount you want. But as long as you know what to do, but if you're starting, the best way I can recommend you, until you understand these settings and you find your own strategy that you're free with, then you can go on with your own strategies. Okay. Now, I choose first buying amount $10. Now I've remained with 990. Okay. The AI margin call should be off, and the open double position should be off. Why? This one doubles your strategy. Everything you put here is doubled. That's why it is called open position double. Then the AI margin call works when the robot detects any rapid fall. But remember, sometimes the market moves down gradually without any rapid fall, no rapid fall. So it may not detect any rapid fall, and the market and the margin calls wouldn't be bought. So that's why we remove it. It should be off. Okay. If I'm trading with $1,000, the first margin calls I would love to set, I set 20 margin calls. You can go beyond that. You can go beyond that. You can set 30. Then you can deal with your margin configuration. The most important thing is the margin configuration. The whole portion take profit ratio, this is the percentage you take out of the market. According to the strategy we are going to use, this only works on the first 4 calls, margin calls. This one. Sometimes I leave it as default. The whole portion take profit callback is the increase of this percentage so that your coin sells out. It has to hit 1.3, then it increases by 0.3, then it sells out. Or after increasing by 0.3, it decreases by 0.5 so that it sells out. It decreases by 0.5. So it increases, it decreases. What is increasing and decreasing? This one here. So if you set 1.3, it increases by 0.3, decreases by 0.5, then it sells. So advantage of this when you're trading on cycle, it brings down the price, like it is sold on a lower price and bought on a lower price. So that it levels the strategy, okay? Whenever you're trading like on cycle. So I leave this as 0.2 and this one 0.0, 0.1 at times, okay? I can leave this one 0.1 and this one 0.1. Let's make it 0.1. Now, the most important thing is the margin configuration. If you want to be the best robotic user and you understand the margin configuration, the margin configuration is simply a combination of the first buying amount, margin call limit. So whatever you set here, whatever we put here is determined by your margin configuration. Here, I repeat, whatever you put on your first buying amount and whatever you put on margin call limit, you find it on margin configuration for more editing. So this is where you do most of your work. This is where you have to put your calculations, put your knowledge here, put your understanding here. What does this mean? This is where you're going to put your capital, your take profits, the capital management, risk management, everything is going to be here on the margin configuration. Okay, so you go to margin configuration. So you see, when you scroll down, we go up to the 20th call. Just because we've set 20 margin calls. I said whatever you put here is determined by the margin configuration. Whatever you put here is determined by the margin configuration as well, okay? So when you go to margin configuration, you've set 20 margin calls. You can go up to 20 margin calls, okay? So the easiest interpretation of this page, we've got the margin call drop and the multiple buying ratio. Okay, so the margin call drop, this is the margin call drop. This line here. It means this is the percentage at which the robot will be buying when the market moves down. This is your backup I was talking about. You're coming into the market, you don't know what is going to happen. You've made your analysis, but you don't control the market. We get fundamentals, the market moves down, but you've got your, whenever the robot uses, whenever the market drops and the robot buys by these percentages, it decreases the floating loss as well as forming forming sub positions or independent positions. Like you're trading Celo, but inside Celo you have Celos. Like you've got sub coins. Okay, You're trading Celo, but inside it, you've got other Celos, you've got other coins. If you've got other coins of Celo, that means they are independent. They can be bought as coins independently, sold as coins independently. This is the main Celo you've bought, but inside it, there are many. Okay, so these ones also become independent. Let me hope my explanation is better. Okay, so the margin call drop is the percentage at which the robot keeps buying when the market goes against you, and it works only when the market is moving down. When the market is moving down, okay? The monthly buying ratio is the amount invested by the times you put here according to your first buying amount, which is 10. I repeat, multiple buying ratio is the amount invested according to the times you put here by your first buying amount, which is 10. So what does this mean? If the market falls by 3.5%, let it buy 2 times. What is it buying? Your first buying amount, which is 10. 10 times 2. That means it is carrying $20. 10 times 4, carrying $40. 10 times 8, carrying $80. 10 times 160, sorry, 60 or 16, which is 50. So this margin call system is called dollar cost average. It doubles, or we call it double up, the default one. But using it, you should be with capital. Whatever you put here, make sure that capital is available in your spot wallet, because you may put settings of $2,000 and yet you're in your wallet you have $1,000. The robot is going to buy what is available, then the strategy will stop, because you've given it capital that's not available. So it's not going to do the miracles or the impossible to give you more capital which you don't have. It is going to use what is available. Guys, are we following? Are we following? Are we moving together? Are we following? Are we following? I'm currently experiencing what are you experiencing? That now my trade over 1,000 for some days now, but the robot keeps selling my 15 margin calls on cycle and dropping profits, although small according to my capital. Notifications have informed me that it has bought over 40 times and sold several times equally, yet in floating loss. That is a very good achievement. Thanks for learning and knowing that. Now, let me give you an example. If you had, remember, some of you entered 1,000 sats at 0.003, around there. 1,000 sats is trading at 0.0026. Okay. Now, if you entered here with that margin call, you're this way, floating and waiting. You'll be there waiting for some weeks, by the way. Yes, I want to be open. You'll be there floating for some weeks if you don't have margin calls. Okay. But this person, at least he managed to set margin calls. The moment it bounces back, like after that, it sells, then it drops again. It bounces back, it sells, it buys again. Just there before getting to your average price. By the time you get there, you've made some good money. Okay. Thanks for following. Thanks for following. Thanks for following. Let's proceed. Let's proceed. Okay. Now, let's dive into. So the most important thing is the margin call drop, the percentage you put here. This is the default and it is so big. You cannot cover this up. It is so big. It is very hard for the coin to follow this percentage, and it will take time for your robot to buy. The easiest way you shall have to find the appropriate drop. So I want to first talk about this obvious example. Okay. Most of us are floating here. We are floating. And I want to give you this, and you'll find it true. Most of us are floating, but we are floating in between negative 20 and negative 60. Am I lying? Most of us were floating in between that negative 20 to negative 60. Most of us, if you look at your coins, we are floating in between that negative 20. If I'm lying, you can type in the chat. Most of you are floating by that percentage. Most of you are floating by that percentage. Look at your coins, negative 20, negative 30, negative 40, negative 50, negative 60. For those coins who have for those coins that have crashed so badly, they have got those of negative 70 and 80, but they are very few. Most coins are floating in between that negative 20, negative 30, 40, 50, 60. Okay, it is true. So when you look at that, please guys, let's try to use some common sense. When you look at that, what comes into your mind? What comes into your mind? For me, when I look at that, what comes into my mind, I'm like, whenever I set any coin that is volatile, at least I should come up with a drop of 30% down. At least 30% down. Because I've seen that most coins we are trading are floating in between negative 20 to negative 60. Most of them are on negative 30, negative 40, around there. Around there. So what comes into your mind? What comes into my mind, I'm like, at least whenever I'm setting, my margin call drop should be up to 40%, 30%, 50%, at least that. You have to put that in mind. Put it in mind. Even if you don't make an analysis, or even if you're trading Solana, even if you're trading a Southern Stars, it is capable of falling negative 30, negative 40, negative 50. If you want to test that and you think I'm lying, you go and set right now. Let me see. Set like bomb. Set like bomb. Expose everything. Don't set margin calls. After like 3 days, you'll find yourself in negative 20. Okay, you'll find yourself in negative 20, negative 30, around there. Okay, so when I knew that, I was like, now this is my backup. So for example, even without doing any analysis, if I'm going to trade sell, that means I'm going to use 30 drop. This is what I'm going to first look at. Okay, let's say, oh, I'm scared of the market. Let me use 35%, which is close to 40. Okay, this is what I'm going to use. So how am I going to divide it here? I'm going to use 35%. Okay, I've set 20 margin calls, you see, 20 margin calls. I'm going to go to your calculator. This is easy calculation. I don't think there is anyone who can fail to divide this. Just divide it. Okay, you get your 35% that you've got, then you divide it by 20 margin calls to get 1.75. So where do you put the 7.15? You put it on each margin call you're going to set. Let's make it 7.8. Okay. 1.8, not 7. 1.8. What is the advantage of this? You've got a very good margin drop, and it is very easy for the robot to buy 1.8. Okay. 1.8. So this is the easiest calculation you can make, but it doesn't mean you can put 1.8. If you have another strategy, another method, you can put your own figures, as long as when you total them up, they come up with 35. As simple as that. You can put even 2, you can put 3, you can put 1.5, as long as when you total them up, you come up with, when you total them up, you come up with the total, which is, the total is 35. Okay, guys, have we got that? It is that simple. It is that simple. No complications. No, that's simple, guys. Are we moving together? Have we got that? Have we got that? Hmm? Can you repeat? Where should I repeat exactly? Where should I repeat exactly? Be specific. I see where I can repeat. Because I cannot repeat everything. I go back, we set up, then I come to margin configuration. Okay. You guys, you just complicate trading. Just make it simple. Make it simple. You don't need a lot of analysis. Learn some little analysis on the trading view, the trend, how to take the margin call drop, good coin selection. That's all. Select your good coin. Can set up. But yes, but the first four calls need to be very less, not same. No, who told you that? And where did they put it? I told you. I want you listen attentively. I told you these settings you see, they are not crammed. So for you, you crammed. For you crammed that the first four margin calls they should be carrying very little like percentage. That small percent. That's what you crammed. My dear, don't cram. Okay. Did you see it written anywhere that it should be? No, you've just crammed it in your head. Don't cram. Just understand what you're doing. Okay. I myself on the first four margin calls, I use zero 0.5. Okay. But I understand why I'm using zero 0.5. Okay. Let me show you the advantage. Do you think for Celo to buy 1.8 is, do you think it is very hard? This is not big percentage. This is not big percentage for the coin to fail. For you, you don't want to be patient. You want these margin calls to be bought and finished. You're going to put your zero 0.2 here, 0.2. They are going to buy them only one candle, only one drop of a candle. They are going to buy all your 20 margin calls, and you'll wonder, how did they buy these margin calls? Then you'll end up floating. Have you set margin calls? Yes, I've set 20 margin calls. Then we shall ask you, how much was your margin call drop? I used 0.50. We shall tell you that is a very small margin drop. Whatever you put here is not the problem, but you understand what you put. What does it mean? For you, you've crammed that you have to put small here or what? Do you think they buy these ones different? Okay, if you're floating in negative 40, if you're floating in negative 40, then what happened to this? Because you put this as 0.5, 0. Okay, you just have to understand these settings. It is that simple. You don't have to cram. For you, you've crammed that you have to put. Okay, I'll have to explain that. I'll have to explain that. That's why I said if we've got a drop of negative 35%, it doesn't mean you do as I did, but I'm showing you the best way you can divide. The first easiest way you can divide your 35% in 20 margin calls. Okay. But I said you can go on and put all your own figures, even if it is 0.1, 0.2, 0.8, as long as when you total the figures you put here in this line are giving you 35%. Are we together? Are we together, Mr. T and C? Are we together with that? Let me hope you've got that. Repeat the drop page lead. How do you get the 35? Were you not following? I don't want to take you into trading view to confuse you. I said most of us here we are floating in between negative 20 to negative 60. So I took negative 35 as an example because it is in between this. Okay. I took it as an example. What of between negative 20 to negative, you can go for that, but depending on which coin you're trading. Because the drop you take while trading Solana is not the drop you take while trading Bonk. These are two different coins. This is an altcoin that's not so volatile. This is a meme coin that is very volatile. It needs more drops, so you have to identify which coin you're trading. If you want to ask, the problem you don't want to ask. The groups are there, come and ask, I want to trade this coin. Which drop can I? If you haven't learned how to use the trading group, we shall give you the drop. Okay, we shall give you the drop. Come again on what? On what exactly? Someone said, I repeat on the drop page. Okay, I'm going to repeat. This time I'm going to use a different method. Okay, I'm going to use a different method. For this person who said, I'm going to use your method. Okay, I'm going to use negative 35 drop. Okay. So we've agreed that most of us who are floating, we are floating in between. We are floating in between negative 20 to negative 60. So we took the mid part, which is negative 35, at least for like an example. Okay. So if you're trading for now for the current market, at least make sure you set something that is above negative 20, negative 20, negative 30, around there, negative 40, to be on a safe side, because we don't control this market. Okay. Now, we have agreed we are going to use negative or a 35% drop down. Okay. Why do I call it negative? Because it works when the market moves down. Okay. Now, I'm going to use this guy's example, TNC. I'm going to use like 0.5, like the way you said, 0.5. 0.5 for the first small margin goes to be bought so quickly. That's what we want. Okay. So this 0.5, you see this 0.5, when I add it up, I come up with 2%. Watch closely and attentively. 0.5 plus 0.5 is 1, plus 0.5, 1.5, plus 0.5 is 2%. Remember, and I have my 35%, just like that. Then I'll have to go to my calculator. Let's make mathematics easy. Okay. 35 minus 2%, which is already covered. I remain with 33. Okay. This one is already covered. So I've remained with the fifth call up to the last, making 16 calls. There are 20, but I've covered 4. That means I've remained with 16. So the remaining percentage, the 33, is what I'm going to divide by 16 to get 2%. So I'm going to put here my 2% throughout. You can divide the way you want. You can put the figures you want. As long as you understand what you're doing, and as long as whatever you put here totals to the margin call drop you had chosen to set, you put here your 2%. These settings are all about understanding. You don't have to cram that I have to put 2 always. No. Okay. You can come up with your own strategy. For me, I teach you to understand these settings. I don't teach you that this strategy, cram this and that. No. Okay. You put your 2%. So when you total this up, 2 plus 0.5, you come up. I have not saved. Yeah, I've saved. You come up with your 35% drop. Are we together? Let me hope Mr. TNC have given you more light on that. How do you get the percentage drop from the chart? You've not been attending the trading view lessons. Now, you want me to switch to trading. For those who have been on the trading view sessions, you go and look at the previous sessions. They were recorded, and we share them in the group. Go and look at them. You see how we measure by taking the resistance and using the support lines. Okay. Let me hope it's clear. Then we go to to division of capital. Guys, let me hope we are clear with that. Let me hope we are clear with that. For me, I'll never recommend you to trade one shot because I know how they treat. Yes, they can squeeze you. The market can squeeze you thoroughly. They can squeeze you so well, you end up hating the business and you hate the people in the business. You'll hate yourself. You'll even delete the apps. This market is not for, it's not our market. We don't control it. You have to go there and find opportunities of making money. Don't get into the market and make yourself as if you control the market. Because mostly when I'm teaching trading view, the crypto market is controlled by the fundamentals. Even if you set your technical analysis, you come up with your proper technical analysis. If fundamentals hit the market, your technical analysis will be nothing, totally nothing. Okay, but it is helpful because you know what to do. Okay, let's proceed. Let's proceed. Let's proceed. Now, let's go this on the multiple buying ratio. This is so important. Okay. Now, when you're using this strategy, the first four margin calls, as we all know, they are not so important in the game because when the market falls in the negative 40s, this one here, you'll not see it. It will be above. Okay. It will be above. So the market will be concentrating on these margin calls that are down from the 5th up to the 20th. It will be in the 17th, 16th, 14th, 13th, 11th, 9th. It drops back, it rises, drops, rises, drops, rises, drops. Okay. Once you see the coin dropping and it buys your 5th margin call, 6th margin call, that means it has started what we call the sub positions. And I told you these are the sub positions, and they are independent. Okay, they are very independent. That means that this whatever is invested here is independent from this and independent from the whole coin. This means what it is, you're trading cello, and this is another cello, another cello, another cello. I told you that you're trading cello, but inside there are many cellos. Okay, so these ones are independent. Well, these ones are independent as well. If you've been trading actively, you should be noticing this. Whenever they buy this, the first four margin calls, they buy the 5th and the 6th. Whenever the market moves up, even these ones can be sold independently. But this time, they'll be sold at their own percentage of 1.3 around here. Okay? But they're not completely independent margin calls. Sometimes they're not sold as independent. So by these ones, it is a must. It is a must. They are sold independently. Okay? Now, we are going to divide our capital. Remember, we started with 990. We remain with 990. The first buying amount is 10. If you add, we come up with the 1,000. Okay? Then, what I'm going to do, I'm going to get some little capital. As small as $90. If you have like 990, for me, I'll get like this $90. Or maybe I'll move only $50. Okay? Hey, let's make mathematics so easy. Some of us, we are not good. Okay. 990 that will remain, then we minus the 50, we remain with 940. So these 50 that I've removed, I want to expose it on the first four calls. Why? Because these first four calls are not so important. When the market falls deep, it will be concentrating in those calls that are down. So why am I doing this? I want to put most of my capital in the deeper market whenever the market goes against me. I want to put most of my capital. That means I'm going to expose 50 here. I expose 10 as my first buying amount, and I'm going to expose 940 in the sub positions. This is how I manage my capital. This is how I manage my capital. Okay, you can go ahead and come up with your own strategy if you understand. Like you can use like 20 as your first buying amount, use 100 on the first four margin calls, use like 800 in the margin calls. You can do that. But I want you to understand this. Okay. So this is how far I manage my capital on this bad market. Because I know when the market goes in the deep, it will concentrate on the downer margin calls. It's where I put the most capital. Okay. So the easiest way to divide your capital, the $50 we've moved, I'm going to divide it here. Okay. So it's very easy. You can decide to put here $5 if you want, because you understand what you're doing. Five. Yeah, you put here maybe like 10. Here you put there like maybe 2.5 and 2.5 if that's what you want. But as for me, I'll first go and get my $50. I want to expose on the first four margin calls. Then I divide it by four margin calls to get 12.5. So how do I expose 12.5? Of course, I cannot put 12.5 here. If I put 12.5, it is going to buy 10 times 12, which is 120, and I want only $12 to be bought there. So you go ahead and proceed, and you divide it by your first buying amount, which is 10, to get 1.5. So you come and put your 1.5 here. 1.5. So it is 1.2, sorry. 1.25. 1.2. So you've remained with 940. So you divide it by the margin calls that have remained, 16 margin calls, because it's where we want to put most of our capital. 940 divided by 16 margin calls, we get 58, 58, we get $58. Okay. So getting $58, you divide it by your first buying amount, which is 10, to get 5.8. So 5.8, 5.8 times 5.8 times 10, we get 58. Just like that. Mm. You make it easy. You people, whenever you're attending these sessions, come with your notebook. You write it down. You say margin configuration is equal to this and that. If you cannot grasp it in your head, you can remind yourself with the notes. Okay, 5.8. 5.8. There you've done what we call capital management. You've managed your capital. But it doesn't mean you put 5.8, like, don't cram it like that. Like, this is the easiest way to divide and understand. You can use this as for beginning, but later on, when you keep on understanding this setting, you can put on your own figures here. As long as when you total up those figures, they give you the exact capital you want to be displayed or distributed in these settings. Let me hope we are together with that, and we are done with that. Let me hope we are together with that. Yes, let me hope we are together with that. If you miss my sessions of robotics settings, it is very hard to understand these settings, because for me, I break them down so that you understand what they mean, so that you can come up with your own strategy. I'm not going to give you a strategy that use this, and then I'm going to name it juicy strategy. No, I want to make you understand these strategies. Then after you're so fast, please be attentive, be attentive, and watch closely, because this session, I'm not sure that Jackson, you're new in the business. I've been doing this in several sessions. Now this shows that you people don't attend Zooms. You don't even review the recorded sessions. Okay, because for me, I'm not going to entertain this. Like every time you come and ask the same thing. Zooms are always there, recorded sessions are always there. Even this session is recorded. We are going to upload it on the YouTube. Still, you will not go there and review. So I may not repeat. You're going to review it in the recorded session. But let me hope we've got something. Learning something new on macro buying ratio adjustment this morning. Yes. Whenever my first time to attend. Where have you been? Are you new? Are you new, or you've not been following our programs in the group? I don't think you're new. So whenever you understand this margin configuration, here, this is where we find money. This is where we find money. Okay. Then after doing that, let's go to this section. Now, this section is determined by margin call number 5 up to the last margin call. Because they are independent, they are subpositions, they are independent calls. That means if they're independent, they are not sold here. They've got their own take profit where you can sell. So from number 5, subposition, margin call number 5 up to the last, they are called subpositions. They're independent. That means each and every call is carrying 58, 58, 58, 58 dollars, and to be sold at this percentage as default. If you're trading a volatile coin, volatile enough, you can increase at least 1.5. Let's say you're trading both Atard Sats, Floki, Pepe, Celo itself, you're trading Worldcoin. These coins are volatile enough to produce 1.5. I don't exceed 1.5. If you're trading like XRP, you're trading Solana, you're trading Ethereum, you're trading BNB, you're trading Bitcoin Cash, and those altcoins that are not so volatile, you can use 1 or 1.3. But I'm trading Celo, and Celo is volatile enough to produce 1.5. Okay. So that means each and every margin call in the subposition is going to be sold at 1.5 and is carrying $58. Now, I'll say $58 times 1.5%, giving me 0.87. Okay, so 0.87, if they sell like 10 margin calls, you earn your $8.7. If they sell like 15 margin calls, you earn your 13. If they sell like 20 margin calls, you earn your 17. If they sell 30 margin calls, you earn your 26. And this comes every day according to the margin calls that have been sold, because you've managed well your capital. So margin calls, the market keeps playing in those margin calls, the sub positions. How is it possible to sell 30 margin calls and yet you have 20 margin calls? It is very possible. It will sell when the market is good that day or that week. It can sell like if this is the 20th call, 19, 18, 17, 16. Do you know that the whole day the market can play there? It rises, it sells, it drops, it buys. It sells, it drops, it buys. Around there. So you can find that he's playing with 4 margin calls, buying them and selling them severally. 4 margin calls, buying them, selling them several, like 2 times, it becomes 8. 3 times, it becomes 12. Okay? That's how the robot works. That's how you have to understand the robot. Then after doing this, we click show. Since they are independent calls, that means they have got their own their supportion take profit, their increase. This is the increase, like you're saying, if you hit 1.5 that is here, you increase by 0.3. So sometimes for me, I want it to be sold at 1.5 exactly. I leave it as 0. As simple as that. Then when I look here, I'll just talk about the cycle. People tell you that it's not good to trade cycle. Cycle is very good. That's why they've put it here. But it is up to you to learn how and when to use cycle. If I've traded this coin, I'm going to first leave it on cycle. Why? It is because if I leave it on one shot, the market may continue up a bit. It hits 1.3 at $10. It moves out. I'll put it on cycle so that it retains it contains and it retains the coin on the market so that it doesn't move out. It moves up. It moves up. It says like at 1.3 because it's on cycle. It keeps there in the market. Then as soon as it drops, it buys my margin call. As simple as that. That's why I put it on cycle. If you're not comfortable with cycle, if it buys 50% to 80% of your margin calls, you can put it on one shot. By the time it hits your initial average price, you'll have made a lot of money in the sub position. As simple as that. Then you can save. Make sure your margin call is on. You can save. Show. Then you click activate. As simple as that. As simple as that. Oh, it's not easy to teach, guys. Yeah, I need someone who will be replacing me if I'm not available. You come and teach. If you're on my mentorship and not learning, I'm about to chase you away from my mentorship. Okay? I want someone to volunteer on my mentorship, all on my team to come and keep and have some sessions. Yeah, because you also get tired. We also get tired. Respect leaders that come and give you some knowledge on Zoom. They sacrifice a lot. They are determined and committed. It's not easy, guys. It's not easy, just know. Seem to be good strategy. It is a very good strategy. It may not give you much profits, but it gives you the consistency. It manages your risk and it manages your capital. Okay. Yeah. Do you have anyone to put some remarks? Like if you want to tell us something, I'm not expecting questions because I've covered almost. If you want to tell us something, you can unmute your microphone and compliment, put some remarks, and yeah. But we are very few on the Zoom. We went up to 40. We are around 2,000 in the group. Where are others? Did they get fed up of the business floating loss? For me, I love floating loss. If you don't love it, it's up to you because through the floating loss, I make money. Anyone to put something across? Oh, you guys, you don't want to talk like you're afraid.
Okay,
what happens to the margin calls if the trade is not in deep but goes straight to take profit? That's why I explained the cycle. Were you following? That's why I said leave it on cycle. If you put it on one shot, it is going to take you out with the available capital. Okay, but if you leave it on cycle, it is going to sell the available capital, it is going to keep into the market, then until it drops, then it will buy your margin for you. Okay, Mr. Omo. Let me hope I'm okay with that. Someone was saying something?
Okay, thank you, sir. Am I loud and clear?
Yeah.
Good morning, everyone. I'm Wasigepo. Leader, just thank you for your presentation. It has been very good on our side. I just wanted to add something on margin configuration. Sometimes we can set the margin configuration depending on the market trend. If the market is in the upward trend, you can change the setting sometimes, especially those who are entering those coins who are on the upward trend. You can't set like someone who is looking at the coin on the downward trend. So you can also set depending on the market trend. If you are just entering a coin and you are not in a cycle, you can look at how the coin is moving after analyzing it well, then you set accordingly such that you are not affected by the market. If you are like having $1,000 and you want to put that money in the trade and the coin is pumping, so you won't set like someone who is waiting for the coin to buy more margin calls. So sometimes consider the market movement when you are setting, when you're on margin configuration. Thank you, sir, for the time given.
Okay. Okay. Thank you for those few remarks and advice. Yeah. If you can be able to identify the trends, guys, like the way we've been looking at on TradingView. Yeah. So sometimes someone asked about the strategy mode. Okay. The strategy mode, of course, you have to trade. If you want to benefit from the downward market, don't tamper with, make sure it is on. Click here where you see whole warehouse and change it to sub-in mode real-time settlement. This enables the bot to buy and sell and will give you profits immediately as soon as it sells any margin call in the sub position. This one, it will wait for all the positions to be closed to give you profits. This one will sell everything whole. Even if you have 1,000 margin calls, they'll be sold whole as one position. Okay, so trade on sub position, sub-in mode real-time settlement. Okay, for example, if you have time, like if you for those people who are like, if you always have time. Okay, for those people who are always busy, we give them proper settings so that they don't bother themselves, because the robot is supposed to do everything for them. If you have time, let's say that I've been setting solo, I've set solo, I've seen that it has bought like 15 margin calls and it is dropping. It is most likely to go beyond even the 20 margin calls. I will have to rush. If it has bought like 15 margin calls, remaining 5, I'll have to rush. And I increase. You see where you see 2%, I'm like, oh, it is buying faster. Let me increase it to 3% so that it buys deeper. You can also do this. This setting is all about, you just have to understand them, then you keep making adjustments so that it buys faster. You can increase. So it will buy, so that means you've added more 111%, 5 times, making another, you're adding 5% to your strategy. Okay. Then I want to complete this session with compounding. Okay. How do we compound? You can compound by adding more margin calls. You can compound by increasing your market buying ratio. Let's say I've been using 1,000, and after 2 weeks, I've made like 250. Okay, as my profits. I want to add this 250. I want to add it in the margin calls. So first, you can see where where mostly the market concentrates on. Okay, so I'll say I'll get my 250. I divide it by the last 10 margin calls, divide by 10 to get 25. Okay, so that means on the last 10 margin calls, it will be, I'll add $25 to each of them. Okay, so I divide by 10, making it 2.5. So I get my 2.5 plus this 5.8. Oh, 5.8, the initial. Remember, you're going to start from the 10th margin call around here. Okay, so You get what you divided and got 2.5 plus 5, 5.8 to get 8.3. So this time it will be using 8.3. That's how you compound 8.3. That means it is carrying $83 now, from 58 to 83. You've compounded with your capital gains, like the profits you've made out, you compound and you put it in back so that you get proper profits. So your profits are going to increase right away from your 10th margin call. Whenever they are sold, remember they were sold at $58, now they'll be sold at 83. So you find that this time, if any margin calls is sold 83 times 1.5%, sorry, this time you're not getting 0.8. Each margin call you'll be getting 1.2. So you see that your profits have increased. So if they sell they sell them like 20 times 20, that's 24 in only 10 margin calls that you've got. So whenever you make more, you made more 200, you can come and divide it as well, you compound. Or you can increase your margin call. You put there 21, you can increase like by, if you don't compound in this way, okay, you can increase your margin calls. You say, let me increase by 4 margin calls. I make it 24. Then I go to margin configuration. So the 250 I have made, 250, I divide it by 4 margin calls to get 62, divide by 10. So you come and put your 6.2 here. This is another way. So you can compound by increasing margin calls, or by increasing your multiple buying ratio. But the best is increasing your multiple buying ratio. So you can even you can edit your margin calls here on the call drop, as simple as that. You'll be playing with your strategy. You can compound and make a lot of money. You're trading one coin, just you compound by margin calls and multiple buying ratio. As simple as that. Let me hope we are okay with that. The session has been so long. Let me hope, guys, we are okay. Do you have any question? Do you have any question or any remarks? If someone wants to put any remarks, you want to give us some advice, you want to compliment, you want to do what, or I pick at random. Guys, let me hope we've got that. May I use that of adding margin calls? Yes, it is very safe. It is very safe. It is very safe also. So you can choose the 2 options you want. Whatever will work for you is what you go with. Okay. I think we are done and we've learned something today. Until we meet next week, we come to the end of the session. You can have a great day. Yeah.